Today, we will be presenting a case involving Encik Muniandy, a resident individual taxpayer in Malaysia who works as a freelance software consultant under a sole proprietorship business. In this scenario, Encik Muniandy claimed RM40,000 as business, travelling and entertainment expense in his Form B for the year of assessment 2034. However, during a tax audit, he failed to provide supporting documents such as invoice, receipt and logbook. As a result, the Inland Revenue Board of Malaysia or IRBM disallowed the deductions and issued a Notice of Additional Assessment Form JA on 15 December 2025. The audit also revealed that Encik Muniandy deliberately failed to declare RM30,000 of consultancy income received in an offshore bank account because he believed the IRBM would never discover it. Based on this case, we will discuss three main issues. First, the legal course of action available to dispute the additional assessment. Second, the legal option if the appeal deadline is misses. Finally, analyze the legal implication of deliberately hiding offshore income under the Income Tax Act 1967.
Let us begin with the first issue. If Encik Muniandy wishes to challenge the Notice of Additional Assessment issued by the IRBM, he has the legal right to file an appeal under Section 99 of the Income Tax Act 1967 by submitting Form Q. The appeal must be submitted within 30 days from the date the notice is served. Since Form JA was issued on 15 December 2025, the deadline for filing the appeal is 14 January 2026. The complete Form Q must be submitted to the Director General of Inland Revenue. Although Encik Muniandy believed the tax officer was too strict, the IRBM acted according to the law because he failed to provide supporting documents such as invoice or receipt for the RM40,000 deduction. Therefore, while he has the right to appeal, the appeal will only succeed if he can provide sufficient evidence to support his claim. Now, let us look at what happens if Encik Muniandy misses the appeal deadline.
Okay, now let's see what happens if Encik Muniandy miss appeal deadline. Normally, Form Q must be submitted within 30 days time limit. If Encik Muniandy fails to submit Form Q within 30-day period, he may apply for an extension of time under Section 100 of Income Tax Act 1967. In this case, if he was hospitalized and unable to submit the appeal on time, he may submit Form N within 7 years after the original appeal period expires, together with a valid reason to support his application. If the application is rejected, he may still apply to the Special Commissioners of Income Tax or SCIT for further consideration. Therefore, Section 100 of Income Tax Act 1967 provides a legal remedy for taxpayers who miss the appeal deadline due to unavoidable circumstances.
So, beside the unsupported expense claim, the IRBM also discovered that Encik Muniandy had hid RM30,000 income received from in a foreign bank account. Action can be penalty under Section 114 of the Income Tax 1967. It is offences for the taxpayer who provide the incorrect information and the providing false information. Since he was failed to declare, it will liable for under this section. So IRBM may require him to pay the additional tax and the penalty of 100% tax undercharge. So the Section 114 provide he may fine between 100,000 to 20,000 or imprison up for 3 years or both, and other case will be special penalty under the Act. So keeping income in bank offshore will not remain hidden because the authority internationally and exchange financial information.
To summarize, this case highlights the importance of understanding and complying with the Income Tax 1967. Under Section 99, Encik Muniandy has the right to appeal the Notice of Additional Assessment by submitting Form Q to the Director General of IRB within 30 days. If he misses the deadline due to exceptional circumstances such as hospitalization, Section 100 allows him to apply for an extension of time by submitting Form N. Finally, by deliberating hiding RM30,000 of offshore consultancy income, Encik Muniandy may have committed an offence under Section 114 of the Income Tax Act 1967, exposing him to additional tax, penalties, fine and even imprisonment. This case serves as an important reminder that taxpayers should always maintain proper records, declare all taxable income honestly, and comply with tax law to avoid unnecessary legal consequences.